We did it, Grovesy.
Howdy, howdy.
Welcome to Aussie Investors. We're back, episode 6. This is Grovesy to my left. And I'm Anzac. To Aussie Investors. So we talk about shares. I should be better at doing this, right? Shares. No, first property. I usually say property first. Yeah. Property, shares, crypto, gold, and most importantly, NVX Novonix, which are an Australian share, kind of like a American share now too, aren't they?
Yeah.
Started on the
Dual
ASX,
listed.
but yeah,
Dual listed.
Dual listed. Not many people can say that. I'm dual listed. And NVX can, which is good. And I think that's what we've got to talk about first. But before we talk about that, we better just do your disclaimer. Disclaimer there.
Yep.
This is
This
not
is not
advice.
financial advice.
If you want advice, speak to somebody else.
Speak to an accountant or a financial advisor. Or a
Don't
bank
listen to
accountant,
us,
or
basically.
Or someone boring. If you want some entertainment in how to do your finances, then listen to us.
We actually got a bit of views last week, Rosie. I don't know if you've had a look, but yeah, I got some comments as well. I've got them here. Do you want me to kind of read them out to you, or show you them?
Share screen. Share screen.
Okay, share screen. Look, I got them in my my email, as you can see here. Shout outs and comments. Can you see that?
Yep.
Okay. Hobie is a mate of mine. Shout out to Hobie. He gave me a call. I got a few text messages and stuff. People enjoyed it, but Hobie called me to say how much he enjoyed it. And he said he liked it. He just thought this podcast was just two mates just talking and just talking shit, and found it really interesting. Thanks for the call. He had a question, but I'm going to answer this question. Where would you put 2K right now? Now, again, this is not advice, but let's say you were walking outside your house, Grovesy, to the letterbox, and you looked on the ground and found $2,000. What would you do with it right now? Just to put you on the spot.
Me personally, what would I put it in?
Yep.
Probably put it in Novonix.
Me too. That's what. But that's not advice. I put it straight in NVX.
Or I'd put it in coal stocks, like Whitehaven.
Coal. Yeah.
Coal stocks.
Yep.
Because the coal price has gone absolutely bunter.
Yeah.
In the last.
But is it going to keep going up? That's the thing.
I don't think it's going to keep going up, but I think long term, just like with oil, there's going to be less and less supply because companies aren't investing in coal. So you want to make a quick buck over the next couple of years, put a couple of grand into coal, and you'll probably double it, I reckon.
Okay. Carolyn and Chris, they said to me, I sent this, and they said, share portfolio, how to get one, and what's the best, which is a big question. And we didn't plan this answer at all. I'm just dumping that on you.
Well, to me, the easiest, if they want a quick and easy share portfolio, to just buy one of the ASX 200 ETFs. Yeah,
ETF. So just explain, what is an ETF?
It's an exchange traded fund. And if you buy an ASX 200 ETF, as an example, you'll be buying a piece of the pie of the top 200 companies.
So you're not buying just one company, No,
you're spreading your $2,000 as an example over 200 companies. So there's advantages in that, but disadvantages in that as well. Because you basically, your money will follow the market. So if you watch the news at night and it says the ASX went up 20 points, well, the ASX 200 went up 20 points, that means your money's gone up.
And I guess the very first step is just getting a share, downloading the app. Do you know what I mean? Like going to your bank and getting it, and you put your money in that, and And, you know, then the next step is, you know, which shares do you get, which always can be hard. Yeah, getting an ETF. So you're buying more of a, you know, like lots
you're
of
basically
things.
diversifying, like buying
Diversify. That's the key, isn't it? You know,
one piece of 200 companies is going to be a lot less risky than buying, say, Novonix or Whitehaven, just one share, which you got all your money.
But, you know, let's be honest, 2K isn't a lot of money. So I'd be just putting it straight into NVX. But that's not financial advice. Mary, mother-in-law Mary, I don't know, you met her?
I think I have, yes, at your wedding.
Oh, yeah. Next time, please wear more elegant. One investor laying on bed. That's you.
I'm not in bed today.
Oh, wow, Jesus.
I'm sitting at my desk.
But are you in your pajamas? I'm in my pajamas, and that's the next point. And the other, meaning me, is wearing a bitch shirt. Do you know what a bitch shirt is?
A beach shirt.
A beach, yeah, but bitch. It's pronounced wearing a bitch shirt. So there you go. So Gravesy, I guess that's what Hobie was kind of saying. We just, you know, we don't want to dress up, and there's plenty of people on YouTube that are wearing their fancy suits and they're trying to look the part. We don't want to look the part because we don't want to be those people, you know, and you just listen to the shit, and, you know, like so many people are just trying to sell you something, you know, like,
exactly.
Look at me and my 5 Ferraris, and I've got 6 properties because I did this and that. You know, it's like, fuck off, you know, like,
we've got no vested interest in
fucking vested interest. No fucking. So there you go.
Besides the fact we're very passionate about Novonix.
Passionate.
That's probably one bias that we've got.
NVX, definitely lots of bias in there. But I own probably about, I should know exactly, probably 30 companies on the ASX. That's quite a lot. But I own more NVX than anything. And
percentage.
And it's just exciting, that share. Like, not just exciting as the share itself, but exciting as the industry. Industry.
Exactly. And the long-term growth. Like, you can put your money into Coles if you wanted tomorrow.
Yeah.
But it's going to be boring as batshit.
Boring as fuck.
You're going to have 2 and 3% rises and falls. And I got 10% 1 month, down 10%, and it'll just
boring.
Plod along.
Boring.
But if that's what you like, go for it.
Yeah.
You know, it's each to their own. It all depends on your risk profile.
All right. Oh, I did the wrong thing. Stop sharing. Let's do this. Share screen. Whiteboard. Okay, Grovesy's points of the day. Number one.
NVX is back, baby. We are back.
Is back. Let's have a look. So this is today.
Let's look at the chart.
Look at today. Oh, look, 0 today. Is that right?
I can't see anything.
Oh, okay. Stop sharing. Yeah, let's try again. Share. Oh, okay, sorry. Yeah. Oh, stuff all. It actually ended up going up, but you know, it opened so well.
It had a big pump at the start.
It
actually went above. Yeah, it actually went above $6.
Yep, 6.11 at early in the morning, 10:30 or so.
Yeah.
And then came just to finish just a bit more.
Yeah.
But the whole market did that as well.
Yeah, exactly.
But it wasn't just today. Let's look at 5 days. So over the past 5 days, we've gone $5 to 5.70. But, you know, crossing that $6, it's a big move. It's a big move.
I actually thought once it got above 6, it would break out and stay above it, but it didn't. But anyway, but 13% in 5 days.
That's huge. It's fantastic.
Huge.
And it definitely says to me, if we look at this 6 months, remember we were talking about, this here. We're like, wow, we've been around that $5, not over, not much under for over a month now. Yeah, look at that. Yeah. So take out that. It's been sitting there, and then from Wednesday, it's just gone from $5 to $6 basically.
Yeah.
And it's been good. So NVX is back.
Yeah.
And it feels good.
Wow, it's 46% down year to date.
Yeah, Jesus.
Well, I guess it's coming. That's because it was like $12 6 months ago. So,
yeah.
well,
Anyway,
and
that
means it's got 46%
in that
to go
past, that year to date, we've had good news.
Yeah, we listed on the NASDAQ.
Yep.
But then all the institutional investors got out of tech stocks, which Novonix is a tech stock. Plus, we've had the war.
Just been smashed.
Interest rates are going up. That's why the institutional guys are getting out of tech. That's affected it. But I think if we get a big announcement like a offtake agreement, or once they can hopefully confirm this Samsung agreement, it could just take off again.
Just going to go crazy. Absolutely. That is the next big thing. Oh, still talking about NVX. You said you watched this, Grozy?
Yeah, this was a really good video that you actually sent yesterday.
Yeah.
Just about the risks in
I can't turn it down because then I turn your voice down.
That's okay.
So how do I do that? Oh, maybe I can turn it off here. Yeah.
Yeah.
I can still hear. So we got to get a nice disclaimer like this. This is what's his name from the Stock Factory? Jeremy. What a legend. What a legend. He's just out there, Battler, just talking about NVX. He talks about a couple of other shares that are good too. Passionate. What a legend. So he just talks about I'll fast forward the risks. So there they are.
Yeah.
We'll leave the link in the description or something like that. But he went through this. Did you want to just go through a couple, Grovesy? What did you like, or what do you reckon?
Well, it basically just reiterated what we've already talked about in looking at the other side of it, because we're very passionate about Novonix, but we're also realistic about Novonix as well, in that it is a speculative stock. It is a growth stock. And well, I guess probably out of those points there, the third point from the bottom, the additional commercial deals, such as one with Samsung, might not materialize. That's definitely a big risk. But I'm confident with that if they don't sign up with Samsung, someone else will sign up with them.
Well, the thing is that they've got the best product.
And they've got the best product.
Samsung would be lucky to have this. Would be lucky to have the best product. Everybody, it doesn't change the fact if you don't get a Samsung or you don't get a VW or something like that, and you've got the best product, then you're not worried.
Then the second point underneath, the competition could increase.
Oh, yep.
That's a definite thing that we've talked about before.
Yep.
But like if you listen to this whole video, like he pointed out, and like we've talked about before, the huge advantage that Novonix has over a lot of other graphite companies is that we have the grand pooper.
Grand pooper, the fucking Papa Smurf of it all.
Papa Smurf.
And no one is ever gonna fucking have that, right?
No one. And we have the IP. We've got the IP that's been patented for this DPMG technology.
No one fucking ever can have that shit.
Yeah. Plus,
keep going. I like this. Yes.
Plus, we've got the researchers in the background, the Grand Pooper. Plus, there's a Jeff Oberak. For Dalhousie Uni. They're all currently and funded by Novonix, plus Dalhousie Uni, plus the Canadian government. They're funding these guys to keep coming up with better tech.
Now,
so competition may come in. But
let's say competition. Sorry to interrupt you, Grozy, but let's say you had a company that just thought, "Fuck, we want to make our own synthetic graphite here in Chattanooga, Tennessee." And they decide that today, March 2022, sorry. How long before they get to where NVX is now?
Well, could be 5 years, could be 10 years. It would all depend.
Mate, it'd be fucking longer than 5 years.
Yeah, like for one, it's a very capital intensive.
5 years, NVX is going to be a superpower. Nothing
they're
is
first mover. They're first movers in this space. That's the other advantage. So yes, competition may come in.
Competition is no worries.
Yeah, but it is something that you got to keep your eye on, definitely, because But I'm confident because they got the research facilities and they got one of the best world-renowned battery researcher, Jeff Dahn, on their books. And also they have their battery testing facilities. So if anyone in the world wants to test how good their battery is, they're going to go to Novonix, because Novonix is #1 in the world.
Contacts, that is.
Contacts in the industry. They're going to see what's happening.
Any others here that you wanted to talk about? I mean, it says here, you can't see it because it says leave a comment, but technology
that's kind of what we're talking about at the moment. Probably the other one would be the price. Could come under pressure. So yes, the
price of synthetic graphite could come under pressure if substitute materials are shown to be effective, or if other producers price irrationally to protect market share. But I mean, again, that's a short-term thing. You can't, nobody's in business to lose money.
And even if they did irrationally price, there's only a certain time period that they'll do that, like this guy says, before they're going to have to bring their prices down, or like you can't keep pricing irrationally forever.
No.
And the key advantage that Novonix has is we've got 275 million in the bank at the moment, so we've got enough money there to compete with any price pressures. Bloody oath.
And what about this whole, we've talked about the technology, the technology of synthetic graphite. We've talked about like a lithium battery, there was talk about that. Silicon.
There's silicon, and this guy talks about that. There's the solid state batteries, is what he talks about as well. But like we've talked about before, a lot of these are still 10 years away from actually being commercialized.
Minimum 10 years, and they more than likely will never exist.
Yeah, like a lot of these new technologies are great in a lab, but when you actually get it into say a car, they blow up.
Fucking blows up. That's what it does.
Like
it
silicon
explodes.
Silicon, and I've read plenty of articles on this, silicon will reach a certain heat point and then it actually explodes. So it's great for the first, or cracks. It doesn't explode, but it cracks.
It is like a crack explodes. What's the difference?
It cracks, which causes the battery to overheat, which then could lead to an explosion. So it's basically not safe. So it's great for, say, the first hour of charge. And after that, or hour of usage, but after that, then it starts to overheat. So
there is no other option. But
not at this stage anyway.
At this stage,
not to say in 10 years' time that there might not be something else, but at this stage.
But in 10 years' time, if there's something else, then it won't exist for, it still has to be made and put in cars.
There's still a lot of infrastructure. Look what Novonix has built a factory, or fitted out a factory.
And Novonix is
big
on
money involved.
the cusp, the brink of it's not a company that just makes synthetic graphite. This is a research and development company.
Yes.
Okay.
Yeah.
If anyone makes a new battery better, it's going to be Novonix. It's going to be the Papa Smurf. It's going to be this team.
Yeah. I'm confident.
This is the people that are going to do it.
Yeah, because the best technology in the world has come out of Jeff Dahn's labs.
The best.
And Dalhousie Uni. If you look through all the research papers, everything, that's where all of the best battery tech, over the last 10, 15 years has come from.
I'm pumped. You pumped?
Yeah. So there's risks. There's what I would say to people is there's risk in anything you do, but there's risk in doing nothing as well. Sitting on your hands doing nothing is a risk as well. That's the way I look at it. No.
Okay. All right. What are the what's the next point? Can you remember? Property doomsayers are back. So we got NVX is back and property doomsayers or doomsdayers. Doomsday. You know, doomsday is Superman's nemesis. He punched him, you know?
Yeah.
Okay, this is a little video sent to me by legend Richard. Okay.
Shout out to Rich.
Shout out to Rich. Here's a ledge. Okay, shit. I always get this crap. I don't even know what this is. Get lost. How do you get rid of this? There.
I have no idea.
Okay, you watching all this?
Yep.
Okay, I'll try again, mate. Screen share. And I'll have to, there. Okay, all right. So I got to hit escape. That was my rookie error. Hit escape. Video. No, not that one. This one. Did you watch this, Grovesy?
No, I haven't watched this.
Well, this has got I'll stop it as we watch it, you know, and yeah, we like to do that. Eh?
Yeah. And discuss.
Can you hear that?
Elliot
is it
bought
playing?
his first home with his partner in October for what we could afford in Sydney. That is a one-bedroom apartment. I'm originally from Brisbane, so I've got friends that are buying houses with the same money.
Good point. One-bedroom house in Sydney is a house in Brisbane.
And probably parts of Melbourne too.
Yeah.
He split his loan between a 2-year fixed mortgage just below 2% and a variable rate.
Nice kitchen. Yeah.
Just above.
I can't actually see anything. Is it a video or is it just?
Yeah, it's a video. You can't see that?
No, I'm looking at your files.
Can you see that?
Better. Yep, can see that now.
You know, talking to a broker, it was seeming like 2023, and now that seems to have rapidly changed. Housing analyst Martin North says even before Australia's official interest rate starts rising, 1.5 million households with a mortgage are already under pressure.
So there we go. It's all about mortgage stress, this.
Yeah.
It was on ABC News last week, March 16th.
If I compare the number in stress now pre-COVID, it's up by 10%. So I've got many more people in financial difficulty.
DFA estimates 42% of borrowers are spending more than they earn.
Well, fucking everybody's spending more than they earn, aren't they?
But this figure is much higher for households that have taken out a loan or refinanced within the past 2 years, and it will rise as interest rates do. Victoria has the largest number of borrowers in mortgage stress, but New South Wales is more vulnerable to rising interest rates.
And how do you know someone's in mortgage stress? It's if, you know, they've got a certain debt compared to their
it's like more than 30% of your after-tax income or something goes towards your mortgage. Means, but
okay.
What I would say to that first opening bit is that, you know, most of the banks actually pressure test people before they give them a mortgage now.
Yeah.
So they add 3% to make sure.
Yeah. Well, they all do.
Actually, so unless people have been lying on their applications, a lot of people should be okay if interest rates start to go up. I think it's a bit of clickbait. A lot of these. Oh,
this Martin North
articles
that was on there before. I listened to him a lot before we bought this house 2 and a bit years ago, and thank fucking God I didn't listen to him, because he was like, oh, prices are going down, you know, everything's going to crash, and he had all these fancy figures and big words. But if you'd listened to that mug 2.5 years ago, it would be the stupidest fucking thing you'd ever done.
Yeah.
Stupid.
I mean, the other thing I would say as an argument to what this guy's saying at the moment is everyone saved money over COVID. right? Because everyone wasn't doing
Heaps
anything.
of fucking cash.
I
Billions.
would say 75-80% of people actually saved a lot of money.
Yep.
And have significant buffers built up
Yep.
against their mortgages at the
Yep.
moment.
Yep. Yep.
So yes, when you look at the top line figures, maybe they would look like they're in mortgage stress, but then when you look at their offset account, they've probably got a shitload of money sitting there at the moment. So
good point.
The most vulnerable are concentrated among new housing growth areas in the outer suburbs, like Narre-Warren in Melbourne, Lumia in Sydney, Tapping in Perth, and Toowoomba west of Brisbane.
Toowoomba. A shout out to my cousins up in Toowoomba.
We're going to see higher.
Oh, here we go. We got someone else here. Okay, so she's not a doomsayer. She's not like Martin North, which is good. They don't just have the negative on this.
Mortgage interest payments. We're also seeing higher fuel prices, strong inflation in rents, also food prices more recently. In fact, when we look at
what's fucking not going up?
Yeah.
What's going down?
But
the price of electric vehicles. That's about it.
The argument against that is that hopefully most employers will give employees pay rises to compensate. Because if prices are going up, then in theory, businesses should be making more profit because they're putting their prices up. So you're making more revenue. You should be able to pay people more.
Essential goods and services, it's running at almost double wage growth.
Barrenjoey chief economist Joe Masters believes most borrowers are well placed to cope.
We've seen net household debt fall. We've seen households store up this $250 billion war chest of savings.
250 billion. That's exactly. Have you seen this, Grovesy?
No, I haven't. No. Seriously, I haven't watched this. No.
Yeah. So they should be bloody interviewing you.
Yeah.
You don't even need to get out of bed, and you know that. It's a nice house there.
Yeah. It's like a point cookhouse.
Look at all those solar panels. And there's a nice pool there too.
Yeah.
Hang on, that's your house. There you are there. Who the fuck is that?
Crazy and his budgie smugglers.
Offset accounts.
Yep. So they're just talking about it's all in offset accounts.
No, that's what I just said. Yeah.
There's a fuckload of money in offset accounts, and which makes me think, why are people keeping all this money in offset accounts? Because by keeping money in an offset account, I see that as, you're better off just putting it in in shares that you're getting more bloody dividends.
Well, but in saying that, like if interest rates went up to 6% or something, then it's worth having money in your offset account.
But
it's probably not worth having. At the moment, it's probably not.
Yeah.
Because the interest rates are so low because you're only offsetting 2% interest.
Exactly.
So yeah.
Buy some shares. All those 250 billion saving people.
Sector doesn't look dangerously leveraged.
The average
doesn't look dangerously leveraged. Here we go. We got Martin North coming back to scare the fear of God. Is going to a bit of doomsaying, and I guess that's the point of watching this too. Is that now, because there's articles that the Commonwealth Bank, many banks have said that they see the price of property coming down a bit. Well, that just gives doomsayers more bonus.
Yeah, like the other thing I'd say about property is more of an emotional investment than shares. So a lot of people, I think I've told you this 100 times before, but I personally, I think most people as well would fight tooth and nail to keep their home, rather than see it get sold at a fire sale or let the banks take it.
You'd work weekends, you'd do whatever you could. You'd beg, borrow, steal.
Beg, borrow, and steal.
To keep your home, to keep your mortgage. Yeah.
Whereas, shares are much more liquid. So that's another reason why I think in Australia, and that's why I think over the last 20 years, we haven't had massive crashes because a lot of people hold on.
Ask this really important difference. There are some households doing well, but there are many households that are not doing well.
Many borrowers have taken out short-term protection, with fixed mortgages accounting for around half of home loans last year. One broker told me about 70% of the loans he worked on were fixed for 3 years or more. But with fixed rates surging and tighter regulation, that broker said about a third of those clients would no longer qualify for their existing loans.
I think that a lot of...
Yeah, but don't forget, so these are also people that have bought properties and held a property over a boom. Like what are their properties worth now? Like, feeling sorry for people buying a fucking house in Toowoomba, you know, like those houses have fucking gone up heaps. And people that haven't bought one fucking want one, you know?
Sydney's gone up 30%. Melbourne's gone up probably 20 over the last
I'm just saying
years.
Toowoomba because I saw it then and there, but, you know, like they've all gone fucking up, you know?
Yeah.
Like Crimea
and
because of that,
river. Because of that equity that's gone up in the property, the banks, you know, there's no way they're going to foreclose on people. If they've built up 20-30% equity over the last couple of years, then you're laughing. You got that security.
Yeah. Been written over the last 6 to 12 months are very fragile, and a lot of those I think could turn quite bad quite quickly.
Yeah, well, I mean, he's probably a nice guy, but I've heard him fucking, you know, doomsday, and it just gets a bit old, doesn't it?
The other point I would make is that the unemployment rate the other day was 4%. So unless people are losing jobs, I can't see how the property market's going to crash, because, you know, if unemployment was 10%, then yeah, that guy would have a you know, very relevant point, because people can't pay their mortgages.
Can't work.
Yeah, they've got to fire sale their house, which means they'll sell it for whatever the market takes.
Yep.
That's when property markets will crash, when in those sort of scenarios. But if you got 4% unemployment, which basically means anyone can go out and get a job tomorrow,
and you know, property's just gone up so much as well. You've all got equity. You've all got.
I mean, it's not to say that, like, I think personally over the next couple of years it's going to plateau, definitely, and might even come down 5-10%. But we've got to remember it's gone up 30. So for it to come down 5 or 10 it's not significant. Who cares?
Who cares?
Others believe an increase in the serviceability test introduced by the bank regulator late last year gives recent borrowers breathing space.
That's exactly what you just said.
Yeah.
The fact it was raised to 300 basis points, that's larger than most forecasts of where interest rates may get to in terms of the rate hike cycle that we're facing. So that will provide some safety within the system for the majority of borrowers.
Recent borrowers like Elliot are hoping the test is tough enough. It will just sort of hit us when it does, and then we'll realise, oh, we should have planned for it. He doesn't have long to start planning. The Commonwealth Bank.
He doesn't have long to start planning. What's he fucking doing? Get off fucking Netflix, mate. Hey? Get off your fat ass and fucking plan. What a fucking numpty. Seriously. He doesn't have long to fucking plan.
Among those tipping a rate rise in June.
Yeah, I've read that a lot as well. June or August. And then another rate rise in November.
Yep.
Melbourne Cup.
Another couple. Okay. Good video. It was fun, yeah?
Yeah.
Did you like it?
I did, yeah.
Yep.
But yeah. And I guess the other point I would make about Australian property is that there's a lot, you know, you got APRA, which you saw the logo there before. There's a lot more regulation in Australia than say America. You know, APRA, as we saw in the last property cycle, APRA increased investor loans to take the heat out of too many investors getting into the market.
Yep.
So there's all these levers that can be pulled to you know, smooth out the peaks and troughs of the property market.
Well, just as we've got Martin North, who's the doomsayer, you know, the world's going to end, and you know, we're going to be dragged down by the crashing property market. On the other side of the coin, we've got Michael Yardney. who couldn't be more positive about property, but he does release some nice articles. So I thought we'd have a quick read of this. Is that okay, Grozy? Can you see that?
Sounds good.
Property wealth skyrockets by 2 trillion. How many zeros is that?
Holy crap. A freaking lot.
Too many to count.
Yeah.
The value of Australia's residential property market has surged to 9.9 trillion after growing at the fastest annual pace on record. The Australian Bureau of Statistics said residential property rose 23.7% through 2021. Huge, yeah?
Yeah, during a pandemic.
Meaning the collective value of the wealth property owners increased by 2 trillion in just 1 year alone.
Bloody hell.
This figure is 30% larger than the annual output of the entire Australian economy.
Wow.
Larger than the Australian, that's crazy, mate.
That's crazy, isn't it?
Dwelling values exploded by more than 512 billion in the December quarter alone. Okay, look at that.
Bloody hell.
Yep. So when did it really go nuts? It went nuts here, June 2020.
June 2020, which is the height of the pandemic.
Yep.
Which was when interest rates had been slashed. So
yep.
Makes sense.
Makes sense. This is a staggering rise in housing wealth. It's hard to fathom, good word, fathom,
the
extent at which housing wealth has increased during the pandemic. Before COVID-19, the ABS valued Australia's residential property at 7.1 trillion. Yep, okay, 9.1. Put another way, the growth of property wealth in the past 2 years is higher than all the gains over the decade before COVID-19. Wow, combined.
Wow. Jeez, I didn't know that. That's
so
huge.
2 years, COVID-19 is more than 210 to 219. Is that right?
So effectively,
yeah,
that doesn't seem right, but yeah, I mean, it's from the ABS, so it must be right. So effectively, they're saying in the last 2 years has gone up the same as what it went up over the previous 10 years, or 9 years. Wow, that's huge, isn't it?
And look what we got here. We got the winner is Brisbane.
Brisbane, yeah. Well, they got the Olympics coming up as well, so that's gonna
look at that.
That's gonna see it go up even more.
Sydney, Melbourne, Adelaide, poor little Darwin.
Look at that. And it's interesting in itself, isn't it? Like those smaller cities have benefited from COVID because people can work from home.
Phenomenal amounts, hey. Hobart saw the biggest increase over the calendar year.
There you go.
With dwelling growing, well, that's a smaller city. It's just like you said. Canberra followed close behind. Melbourne.
Well, I think that's a lot of people, that have lived in Melbourne and Sydney that can do their job from home.
Yeah.
Stuff it. I'm going to go for a lifestyle city and move to Hobart or Adelaide or Canberra.
Do you like that? Melbourne properties only grew by 20%.
20%.
Oh, close that. Okay, there you go. Some wavy lines for you. Mean dwelling, okay. The mean residential dwellings, New South Wales rose 47. Second highest mean was the ACT.
That's just nuts, isn't it? So the average price of a property in Sydney or New South Wales is 1.2 million.
Crazy. Okay, there you go. That was fun, yeah?
Yeah, that's good. Yeah, well, that was an interesting fact about in the last 2 years, gone up more than the last 9 years.
Yeah.
In terms of the wealth.
Can you still see this? Oh, we've done that, haven't we? Done that one. Oh, this was this, I think this is it. We've only got this guy to go.
Oh, yep. So who's this guy again?
This guy, what's his name? Raul Pal. He's probably, I know last week I said how YouTubers that love their crypto nutbags. He's probably, well, he is a nutbag. Who's not? But he's probably considered the smartest crypto investor or so. Have you heard from him before? Have you ever seen
because as you know, I'm not really into crypto. So
yeah,
I know you've got crypto, and Rich is a massive crypto fan.
Yeah, I've got a couple of mates that love it.
Actually, just out of interest, could you bring up the Bitcoin chart? Just so I'd just be interested to see what's happened over the last 2 months with the war. Like, has Bitcoin gone up or down? I've got no idea because I don't track it. So,
BTC in USD. So the past month?
Yes, it went up a bit, and then
when did the war kick on? Here.
Yeah, when was it? Like mid? No, it was just after the Olympics, wasn't it? So it was end of Feb.
So it had a pump there.
So it had a pump. So it did do what I would think it would do, because I personally see Bitcoin and Ethereum as like digital gold.
Yeah,
is the way I look at it. And normally in times of crisis, people go to gold as a safe haven.
But let's look at 5 years. Okay. Before the pandemic, it was 10,000.
Yeah.
And after the pandemic, it's 40.
40. They had a massive pump up, so it doubled, and now it's halved again, and now it's kind of gone sideways a bit.
Yeah, a couple of big pumps.
Yeah.
I mean, it's regardless.
So where do you think it's going to go in the next 10 years?
I just think it's going to keep going up because it's unique. There's a limited amount of it. And I just feel like it's something that appeals to the youth.
Yeah.
I mean, if some young guns want to buy a property right now, it's just crazy, isn't it? You can't get one in Sydney and Melbourne, maybe a small apartment. So people are going to look at other things and look at shares in crypto.
And I guess the other thing I thought of the other day was, with the Russian ruble is getting absolutely smashed because of the war. Yeah. I'm sure there's a lot of young Russian people are probably getting into something like crypto because they can secure their wealth.
Yeah.
There, rather than having it sitting in a bank where it's going to get massively devalued.
Oh, yeah.
Yeah. All right.
And that's the thing too, like the American dollar too. I don't think a lot of people have a lot of faith in the future of the US dollar.
Yeah.
And if you don't
and governments in general, I think people are skeptical of governments and them and controlling, governments just racking up shitloads of debt.
So it's putting money in gold and it's putting money in Bitcoin.
Yeah.
But I feel like gold pumped in this war and it's come down in the past week. And people talk a lot about how gold can be manipulated.
Yeah.
But, can Bitcoin be manipulated? Everybody used to say, no, it can't be manipulated. It can't. But, if a few people own so much of it, then it can.
Yeah, true. Well, and look what happened to the nickel price the other week. That's like a form of market manipulation because the Chinese company shorted nickel.
Yeah.
And caused a massive spike in the nickel price, and they actually shut the market down. So,
all right, so let's
anyway, we're going off track.
Who's this just guy? For a minute or so, not for too long.
Term game.
Yeah. It's a long-term game. I mean, that's quite good too. It's hard to make money anywhere off the short term, isn't it? Saying Bitcoin.
Not unless you want to become a trader, which
you got
to have specialized skills and a fair bit of capital.
And trading anything is hard, but trading Bitcoin is the most difficult. At least shares, you can kind of follow companies and notices and announcements.
Yeah.
What do you follow if you want to trade Bitcoin? Just
Yeah.
throw some sand in the air. Don't forget to close your eyes.
The charts of Bitcoin, any kind of basis around these levels, or that wedge that you're looking at breaks lower, and before you know it, we go back to the 250-week exponential moving average, which is 22,500. If this is 2018 again, that's pretty much what it would do. It'd have another sharp spike lower to hit that 250-week moving average. I don't really know. You know, I thought that.
Well, fuck, you're meant to fucking know. You're the guru. I guess nobody knows.
It should be basing. What's really interesting, you've thrown 8% inflation. You've thrown
8% inflation. I don't like the sound of that.
Well, that's what America's running at the moment.
You've thrown 6.5 or 7 rate hikes priced in. You've thrown everything at it, and the market's not made new lows. That's a positive, but maybe that's just a false hope. Who the hell knows?
Raoul Paul does not think we are out of the woods.
There you go.
Yeah. Well, no one knows what's going to happen.
Yeah.
But he's right. No one knows what's going to happen tomorrow. If they say they do, they're talking out their ass. But what you can do is look at history, and generally history repeats, I think. And you can see what's happened. You know, what happened the last time there were, like we talked about last week, what happened in 1979 when there was a massive increase in the price of oil? Car manufacturers changed what they produced.
Yeah.
So I guess when crises happen, you got to think, what's the effect of that crisis? And there's always opportunities in crises.
That's a good point to finish on, Grovesy.
Yeah.
There's always opportunity in crisis.
Yeah.
All right.
So there you go.
I think that's about it. That's everything.
Right. Yep. I think we've banged on enough.
Banged on enough. I was telling Ariana I speak to you less now because sometimes I don't want to talk to Grovesy about this because I want to leave it for Monday night. You know?
Yeah. Yeah.
Don't want to bore you me repeating myself. You know what I mean?
Yeah.
But I've noticed sometimes you say, "Oh, yeah, I've said this," but you've said it to me before, but you haven't said it in this podcast.
Haven't said the podcast. Yeah.
Yeah.
True. Yeah.
How long have we been rambling on for?
Oh, about 50 minutes.
Geez, it's a long ramble, but it's good. I've been really looking forward to this today. Yeah. Not just today, all week I've been looking forward to this. All week. And
there were some good points there.
Yeah, it's fun.
And I really liked how people left comments and so we can discuss those comments.
Well, I don't know how to turn the comments on YouTube. I should kind of find that out. But
you know, if people like Rich want to give us more videos to look at and discuss, then or you know, give us some counter arguments.
Yeah.
I'm quite happy to have those discussions because, like I say, I look at it from one point of view, and that's not necessarily the right point of view.
Yeah.
Sometimes it is, sometimes it isn't. But so I want to be educated myself as well from other people.
Yeah, that's what this is for. We're not signing people up. We're not giving advice. We're not selling courses. You know.
No.
We're just talking about what we've got and what the mistakes we've made. You know, we both own property. I own shares. You own shares, and we've done really well. And we've done really well with property, and I've done really well with crypto. I've done really well with precious metals as well. And you know, I don't want it to be intimidating, like, oh, I've got this and that, and I've got this fancy fucking shit, because you know.
But I think the best piece of advice I ever got was there's risk in doing nothing as well. I've always remembered that.
Yeah.
So
who told you that?
I can't remember who told me, but it just stuck in my brain.
Yeah.
I thought, well, yeah, I can sit here and save 50 grand and have it sitting in my bank account. It's going to make me feel nice and fluffy. But having that, and particularly now with inflation running rampant, you got to have your money in
you're going to lose. If you got 50 grand.
You're actually going to get going backwards.
Yeah.
Inflation's going to eat away at at the value of that money.
Yeah.
So
See you, Rosie.
All good. See you next week.
See you, mate.
No worries. See you, viewers.
See ya.
Hope you enjoyed it.
Nobody will be listening in at this time.
Tomorrow when they look at it.
Yeah.
Leave comments and discussion points. Happy to discuss.
Oh no, they can't because I don't know how to turn comments on. I'll have to work it out, cuz. I will.
We'll work it out. Yeah.